In this video, we will discuss the recent performance of the S&P 500 Index, SPX, and analyze the current chart trends. We will also explore the impact of rising consumer prices and interest rates on the stock market. Additionally, we will highlight key economic reports released during the week. One notable observation from the past week is the significant decline in small caps, with a drop of 3.4% in just 2 days, Thursday and Friday. Small caps are traded by individual investors and reflect the sentiments and investment decisions of millions of investors. Therefore, their performance provides insights into where individual investors see the stock market heading. The sharp decline in small caps suggests a challenging immediate future for the stock market. Another concerning development is the potential bearish death cross formation, where the 50-day average line is about to cross below the 200-day line. This technical pattern is often seen as a bearish signal and could further dampen the prospects of a sustained market advance. Despite the Federal Reserve's efforts to control inflation, consumer prices continue to rise at a fast pace. In September, the Consumer Price Index climbed 3.7% compared to the previous year, exceeding economists' forecast of 3.6%. The month-to-month increase was 0.4%, following a 0.6% increase in August. These rising prices indicate persistent inflationary pressures in the economy. Prices paid to U.S. producers of goods and services rose by 0.5% in September, surpassing economists' expectations of a milder 0.3% increase. In August, the Producer Price Index for final demand rose by 0.7% compared to the previous month. The Core Producer Price Index, which excludes food and energy prices, also saw a 0.3% increase, accelerating from the prior month's 0.2% rise. These data suggest that inflationary pressures are affecting both consumers and producers. The average contract interest rate for 30-year fixed-rate mortgages in the U.S. increased to 7.67% in the first week of October. This marks the fifth consecutive week of rising interest rates and the highest level since November 2000. The surge in mortgage rates could impact the housing market and consumer spending. Last week, the S&P 500 Index reversed at its rising 200-day average line, coinciding with the rising trend support line from the October 2022 lows. Chart of the daily S&P 500 Index. This week, the support levels held, and the S&P 500 Index gained plus 46%. Several economic reports were released during the week, providing insights into consumer inflation expectations and small business optimism. The consumer inflation expectations for the year ahead increased to 3.7% in September, while the NFIB Small Business Optimism Index decreased to 90.8 in the same month. Additionally, the PPI for final demand rose by 0.5% in September, and the CPI increased by 0.4%. The number of Americans filing for unemployment benefits remained unchanged at 209,000. In conclusion, the recent performance of the S&P 500 Index and the small caps suggests a challenging immediate future for the stock market. Rising consumer prices and interest rates pose additional concerns for investors. The bearish death cross formation and the reversal at important support levels further indicate potential downside risks. It is crucial for investors to closely monitor these developments and consider protective measures to safeguard their capital. As always, do not forget to like and subscribe to our channel, All Things Money, to see more content like this.